welcome to 8 Ways to Simplify Your Manufacturing Business with Tax, Accounting, and Assurance. Today's presentation includes all the expertise from Nicole, Lindley, and Jeff Pechan. A little bit about Mowery and Schoenfeld. We are listed as Crane's top 25 largest accounting firms in Chicago. We have over 20 partners and nearly 200 total employees with offices in Lincolnshire, Illinois, the Chicago Loop, downtown Miami, and the Philippines. We service clients all across the nation and even some international clients. Our offerings include everything from tax services, assurance, transaction advisory, outsourced accounting, international services, business advisory services, wealth management, and even managed IT services. So let's meet your experts for today's presentation. We have Nicole Lindley, who is a tax partner who deals with a lot of manufacturing clients and has great expertise in the area. We also have Jeff Pechan, our Senior Client Advisory Services Manager, on the call today. And they are part of a much larger team that can service any of the needs of manufacturing clients. I'm going to turn it over to Nicole Lindley, who will begin our presentation. Thank you.
Good morning, everyone. My name is Nicole Lindley. I'm a tax partner at Mowery and Schoenfeld. I primarily service our manufacturing and distribution clients. As advisors, the most common question that we receive is, how do we save on taxes? Or are we doing everything we can to minimize our tax obligation? So for our manufacturing clients, there's a number of tax strategies that we look at to do just that. And one of those most common things that we see is going to be the research and development credit. And that credit is a non-refundable tax credit for businesses that are developing a new product or process or are significantly improving an existing product or process. Our dedicated research and development team really is going to look at all of our clients' qualified research activities to determine whether or not those activities meet the 4-part test as outlined in IRC Section 41. Now, what does that mean? So in order to qualify for the research and development credit, you have to meet various tests. Those being, 1, there has to be some form of new product or process or an improvement that you're making to a product or process. That's what's called a business component. With that business component, it needs to be technological in nature. Generally, that's going to be engineering or in the computer science field. You have to be eliminating uncertainty, and there has to be a process of experimentation in place. And our research and development credit team will really go through that with you in detail to kind of get an understanding of what activities could potentially qualify for this tax credit. Once we do that, we look at your expenses to determine the calculation for the credit. The expenses that go into this credit are going to be your wages, supplies, and contract expenses. Those are going to make up the bulk of the credit calculation and are really important to identify and making sure that we're maximizing those dollars in calculating the credit. Once we do that, we will calculate the credit, and the credit is generally going to be anywhere between 5 and 10% of the expenses that we identify. Now, one thing to note is that this is not just a deduction that reduces taxable income of your business. It is going to actually be a dollar for dollar reduction in your tax liability. So it's really great tax saving opportunity, as it really was going to improve cash flow for your business. And whether you're a C corporation or a pass-through entity, that is going to be available to you either at the entity level or at the individual level for a pass-through entity. And the credit doesn't discriminate based on your size or whether or not you're profitable or not. You can still take advantage of this credit despite those factors, and we really will walk you through that process and in order for you to utilize this credit. Now, there's a few things that have come out of the tax law legislation in the past couple of years. One big change with regards to research and development was effective January 1, 2022. Historically, taxpayers have had the ability to deduct their research and experimental expenses. As of January 1, 2022, that's no longer the case. You have to capitalize those costs and amortize them over 5 years for US research and 15 years for foreign research. So there is a timing difference there in terms of your ability to claim the immediate deduction as a result of this tax law change. In addition to having to capitalize these costs rather than immediately expense them, the definition of research and experimental expenses now includes software development costs, and the costs that are included in this capitalization requirement are much broader than what would generally be used in the R&D credit calculation. So in the R&D credit calculation, you're specifically looking at wages of employees engaged in R&D. You're looking at supplies used in R&D, and you're looking at third-party contractors engaged in R&D. That is still true in terms for capitalization requirements, but you also have to expand that to include indirect costs. This is, the portion of your rent, the portion of your utilities, the portion of depreciation that's being utilized for R&D purposes. So just something to keep in mind as you're doing this general analysis. Now, as a result of this change, the R&D credit did not substantially change as a result of the new capitalization rules, which is great for taxpayers because you can use the credit to offset kind of the loss in immediate deductions that you historically received as a result of being able to immediately expense these items. Most taxpayers also are able to claim a larger credit due to these capitalization rules. And we definitely do a deep dive into that. Our R&D credit team will take a deep dive into that to ensure that you're getting the largest credit possible, despite these capitalization rules that are in place. One item that's forthcoming in the research and development area is the new Form 6765. This is the form that you use to claim the R&D credit on your tax return filing. And these changes will be effective as early as potentially 2024. And what these changes include is basically additional disclosure requirements related to claiming the R&D credit. The historical form was rather straightforward. You basically just included the line items, your wages, your contract expenses, your supplies, used to calculate the credit. You did not have to go into detail on your specific research activities that you performed. However, the new draft form that the IRS has released requires you to include those details. So you're going to have to list out what we call the business component, your new product or process that you're developing, the significant improvement that you're making to that product or process, and you're going to have to basically allocate all your expenses related to that specific business component on the form. So much more additional disclosures are going to be required in order to substantiate that credit. We already have that process in place in our R&D credit studies that our firm prepares. So we are definitely equipped to help you navigate the additional disclosure requirements related to this potential new form that's going to be coming out for 2024. In addition to just the research and development tax credit, there's various other business tax strategies that you can take a look at in order to minimize your overall tax liability. We are constantly staying up to date on new legislation, changes in reporting laws, and try to be as proactive as possible in making sure that we're on top of these. You can plan accordingly, whether it's from a cash flow perspective or just in general long-term tax minimization strategy. We are there to help you along the way in those cases. A few things to keep in mind as the legislation continues to evolve. Accelerated depreciation is a great area to minimize your tax obligation. However, bonus depreciation is declining. It was 100% bonus depreciation that you could claim on your assets that are being placed in service for qualifying assets. That has declined to 80% in 2023 and will continue to decline until it's completely phased out in 2026. There's still options to claim full depreciation deductions on qualifying assets placed in service through IRC Section 179. However, there are limitations to that deduction and your ability to claim it, as well as state implications that need to be factored in. So we're there to help you navigate the complexities of that accelerated depreciation and ensure that you are going to maximize those depreciation deductions. In addition, as a result of the Tax Cuts and Jobs Act, there was small business taxpayer exceptions that really came into play. Historically, manufacturing clients and manufacturing taxpayers could not take advantage of these rules because of inventory. However, with the Tax Cuts and Jobs Act, the threshold for your average annual gross receipts increased in order for manufacturers to take advantage of some of the exceptions to reporting. And these could be potentially beneficial to your business in terms of minimizing your tax obligation or deferring your tax obligation. Some of these areas include just general inventory reporting under the uniform capitalization rules and accounting methods. For instance, oftentimes manufacturers were historically required to be on the accrual method. You can now be on the cash method if you fall below this gross receipts threshold, which was $29 million for the 3 prior year tax years for 2023, and that is increased for inflation to $30 million in 2024. With regards to inventory, historically you've had to capitalize, manufacturers have to capitalize a number of costs into inventory for tax purposes beyond what's already being capitalized into inventory from a financial statement reporting perspective. Those rules are not applicable if you meet or are below these thresholds. And same with inventory, what's generally going to be included in inventory from a financial statement reporting perspective may be able to be immediately expensed as an incidental material and supply under new inventory rules as well. So our team is, will walk you through any potential strategies there to help minimize your tax obligation or defer the tax obligation. And we are always trying to be proactive and stay ahead of this to ensure that you're getting the best possible result for your business. So that's essentially the main takeaways from a tax perspective. I'm going to turn it over to Jeff Pechan. He is a senior manager in our client advisory services group. He's going to talk to you about just financial reporting and accounting and how you can take advantage of that from a manufacturing perspective. Jeff, take it away.
All righty. Thank you, Nicole. As Nicole mentioned, I am on the client advisory services side of Mowery and Schoenfeld. I have a little bit of a unique perspective as I spent my first 7+ years at the firm on the auditing side. And so I've kind of seen this whole side of our firm when it comes to assurance and financial accounting and reporting aspects. And the title of this presentation is 8 Ways to Simplify Your Manufacturing Business. I think what we've come across is there's really no way to simplify a manufacturing business, so to say, operationally, but with all the different aspects that come with a business, one thing we can work on simplifying is your accounting and financial reporting needs. And so what comes up first here is obviously financial reporting, but really this in a lot of ways ends up being the final product that every company needs, and a lot of times is underestimated by those in management or ownership until sometimes, unfortunately, it's too late. But this is really all about helping management make informed decisions, knowing the financial position of the company, tracking progress against its financial budgets, and monitoring any performance trends. Really having those accurate monthly financial statements provides invaluable insight into the operational performance of the company itself. When you don't have sound financial reporting in place, the company is more susceptible to fraudulent activity, issues with compliance, whether it's from a regulatory or a tax perspective. And then obviously poor budgeting, poor financial modeling and forecasting, and it really can hinder the company's ability to achieve its objectives. On the flip side, when you have a sound financial reporting function in place, it can really be a launch pad for the company to grow and achieve its financial success. So some of the things, Nicole, if you can go ahead to the next slide. So some of the things that we focus on here, number one, a monthly financial close and financial reporting process, really standardizing this to take out all the inefficiencies, redundancies, anything that could, again, impede the company's ability to put out accurate and timely financial statements. Our goal is to make this as consistent as possible and as organized as possible so that you have all the data readily available for whatever needs may come up, whether it's for external reporting purposes or internal reporting purposes. We like to, the best we can, automate any repetitive tasks by unlocking and utilizing the full functionality of your accounting system. And nowadays, anytime AI is available, we look into that and see if it could be cost beneficial to really help with this process as well. By optimizing your monthly reporting, we like to put together dynamic reporting packages. So this can be tailored really to any business, customized to the needs of the users of those financial statements. We like to understand what the key performance indicators are for your business, and then any operational or key accounting metrics. We really like to build those into a reporting package so that you have a full comprehensive view of where your company's at and where it's headed. And really at the end of it, it's a proactive way for management to make decisions about the company and drive the business forward. Another thing we like to do is, or we can do, is implement accounting standards that are applicable to your business. A lot of times this is obviously US GAAP, but there may also be industry standards that are specific to your business, regulatory standards, anything that may be required by some external users of those financials. And so here you can see a list, lenders, if you need bank lines of credit, term loans, any long-term financing, new capital investors, sometimes customers, in order to reach an agreement, may need a set of financial statements in accordance with GAAP or other standards. Same thing with vendors in order to reach any major agreements or contracts with them. And then, down the road, it's always good from an ownership perspective. If you plan to sell your business, any potential acquirers of your business are going to be looking for financials, usually under a US GAAP reporting basis, but it could be, again, regulatory or industry. But we're focused on all those, and we have knowledge of all those, so we can help really implement any kind of accounting standard that you need. And then finally here, implementing accounting procedures and methodologies that are specific to the manufacturing industry. So just going a little more in depth when it comes to US GAAP, there's a lot of things that are just specific to manufacturers themselves. Mostly, a lot of it revolves around inventory and accounting for inventory. So we're able to apply various cost flow applications for inventory management and assigning those costs to your cost of goods sold. So FIFO, weighted average, LIFO, specific identification. We've dealt with all of them. We've implemented different strategies from an accounting perspective to value those and to do the accounting. And so, really, when it comes to any kind of cost flow assumption or any kind of inventory issue you might come up with, we can handle it. We've also done a lot of standard costing. I myself, I've built different models to help companies with their standard costs and getting those implemented and automated into the system. We like to evaluate your direct material, direct labor, and overhead cost absorption rates. There's 100 different ways that you could potentially calculate these, but we've been there in terms of determining what costs need to be incorporated into that, and then what those cost drivers are for coming up with a metric that you can have good standards and good financial data in terms of inventory costing and valuation. And then finally, identifying slow or potentially obsolete inventory It's always important to build this into your accounting system, your financial reporting. If you deal with things that potentially could become obsolete down the road, to have that in the most accurate monthly financial statements. We've done a lot of analysis when it comes to building cost reserves into those financial statements. So that covers financial reporting. Now, business strategy to us is really all about connecting you achieve that. And there's accounting, reporting, business structure, and tax, and optimizing those in many ways is kind of a baseline and just a starting point for the company to achieve its goals and achieve success. So our focus really primarily when we come on board is to really understand the business and the industry in which it operates. We do have experience with an extensive array of companies and industries, but we do continue to find that each one is unique really in its own right. And for us, that's kind of the fun part, is to get in there, to have those conversations with management, internal personnel, to learn the ins and outs of the company's operations, what its products are, how the manufacturing works, and then all the way to the sale process and what their customer base is. That's where we really gain a lot of insight that not only helps us with the accounting part of it, but then also just helping management, again, set that business strategy for the future, and helping to achieve its goals and objectives. So I see Nicole here is on to cash flow management, so we'll jump ahead. So cash, obviously the lifeblood really to any organization. And so properly managing those cash flows and that cash conversion cycle is one of the most important things that a business can do. And especially with manufacturers, we often see that this cash conversion cycle is a lot longer than other industries relatively. And so really managing that can be a challenge, but also vital to, again, the continued growth and success of the business. And so we have a number of tools that we've built over the years that can help with cash flow management, different models that can forecast whether it's short-term operating cash flows for a 3-week, 4-week, 20-week period, or really long-term 5-year, 10-year, 15-year models that can at least project out where your company is headed, based on obviously input from management, ownership, and economic factors involved. But whatever timeline you're looking at, we can build models to help you see what your cash is going to look like and help you really manage that part of the business. By doing so, provide management with that financial visibility and a roadmap for leveraging their trade payables, any revolving lines of credit that may be out there, any other short-term financing that they may have available to them, and anything else that would supplement that operating cash flow and potentially increase profitability. Another thing we do, implement strategies to reduce the cash conversion cycle with lead time analysis. We're constantly assessing any bottlenecks, whether it's material procurement, in the production cycle itself, or in that distribution process, and we can work with management to really try to remove those constraints. We're never or rarely experts in that part of the business, but with our financial astuteness, we can help drive that conversation and find where the bottlenecks are, because a lot of times it will be apparent just in the financial statements themselves. And you can see, whether it's costs or reducing margins, we've done so much analysis throughout the years specific to manufacturers that we can really help with that process as well. And then finally, developing models to estimate future cash flows and returns from any investments in major capital assets. We can evaluate rates of return based on different funding sources, whether it's from operating cash, any bank debt financing, or any equity financing. And then we can be the drivers. We have numerous contacts with different lenders, different private equity groups, So there's a lot of options when it comes to financing operations or new investments, and we have those contacts available that we can, get our clients in touch with. All right, on to budgeting and forecasting. When I think about this, there's a number of kind of famous quotes out there that are probably similar to this. One that I like, though, is that you have to know the past in order to understand the present. And in a lot of ways, this is really the importance of a company's accounting and financial reporting function. However, if we were to just stop there, then we're heading into the future a little bit blind and hoping that we can just achieve some ambiguous, potentially undefined goal. And so that's where we come in for the next step here with budgeting and forecasting. And again, when we fully understand the business itself, we understand the financials and the accounting, that's when we can help management with planning and budgeting and forecasting for the future. So we're all familiar with just budgeting itself, and we most likely do it in our own personal lives, but it's equally as important for business to have clearly defined operational and financial goals and a budget in place that's going to set the direction for operations in the near and long term. And at the end of it, you have a roadmap and an aiming point for achieving those goals. So an operational plan, that's going to be the groundwork for any financial forecast. And so, we're there to have those initial conversations, things that we'll need or we would need or anyone would need to set forward with that financial budget. But again, that operational plan, what products are we building, manufacturing? What's our production plan for the next year, 2 years, 5 years? From there, that starts the groundwork, and from there we can come up with financial models and forecast models to help you see where your business is headed for whatever time horizon is necessary. So yeah, for us it's about helping management build those financial forecasts, help them understand what the key pivot points are, where any bottlenecks may arise, and then what risks are out there that may impede from achieving the business's goals. Once we have the history and the accounting and the financial statements and financial reporting, we can then look forward to the future with budgeting and forecasting. And then from there, it's about managing those future risks and knowing what they are. Then we're certainly there to help management and ownership with that. All right, on to the most exciting part of the presentation, and that is obviously auditing. And just kidding there, but this word is normally scary to a lot of companies, management, ownership, employees involved. But M&S, our approach has always been to make the audit process as painless as possible. In addition to just meeting a compliance component, the audit itself really can provide management with a level of insurance and confidence in its financial statements, its financial position, and then the operational results that they are reflected in those financial statements and as accurate as that decisions can be made from there going forward. So obviously this is a little more specific. There's financial statement audits, then there's employee benefit plan audits. And normally with each, it's a you need it or you don't type situation. With employee benefit plans themselves, there's the ERISA Security Act that was 1974, and that's put out by Department of Labor. And then there's Internal Revenue Service regulations also that have to be met. And so really, it's an understanding or an awareness that you need that there's that potential out there that you need an audit done of your benefit plan. And covered by that are 401k plans, normal pensions, and employee stock ownership plans. Those are really the key ones that we see for small to private, middle-sized businesses. But there's others that are potentially covered under that as well. And an audit is needed to comply with, again, those Department of Labor regulations. And then it gets the financial statements themselves, once audited, are attached to your Form 5500 that is filed with the IRS on an annual basis for the plan itself. And again, the key thing here, yes, it's an audit, it's compliance work, but really it can give management and ownership, again, that assurance and confidence that the plan administration remains in accordance with the plan's intended design and its purpose, which is always important because you want to retain those employees, whether they're in management or on your production floor. It's important to them that the plan is operating as designed, that their money is getting into the right account, that they're saving for retirement. So it's an important benefit, I think, for a lot of companies to offer their employees. And so ensuring that that's operating effectively and again in accordance with the plan's design is always important. And that's what an audit can provide you. So the specific rule, it changed in recent years, but it is now 100 employees or 100 participants with balances at the end of the planned fiscal year. So it changed a couple of years ago. It was all about having 100 or more eligible employees, and now it's changed to just 100 or more employees at the end of the plan's fiscal year that have account balances in the plan. If you exceed this number, that's when you would need an audit. And that's again where M&S, we can come in and try to make that as painless as possible. We have a lot of experience with all different companies, all different types of plans. And so we're able to get through those pretty quickly, pretty speedily, and meet your needs. And then last, but definitely not least, is the internal controls and procedures perspective. And for me, coming from auditing, this was an area that really interested me to get into the client advisory services side of it, because those internal controls, again, it's all about managing risk and providing reasonable assurance that the company's operating, reporting, and compliance objectives are met. And so this is kind of the bones, the infrastructure of any business organization. And it's so vital to the financial reporting, to the tax compliance, to the everything, budgeting, forecasting, everything we've talked about thus far, all really stems from having a good system of internal controls at your company. The key words really here, managing risks and achieving objectives. So everything we've mentioned thus far, again, it boils down to an integrated system of processes and procedures. They're carried out by personnel within the organization or by a system of IT, software applications that make up your internal control environment. We have a lot of experience with a lot of different companies, manufacturing and beyond, and we've seen hundreds of different ways that an internal control environment can work and can be effective. We've also seen lots of cases where when it's not set up correctly, it can really hinder the business and in the worst cases, put it out of business. So really this is such an important part to any business, but especially in manufacturing, making sure you have good internal controls in place so that you can, again, achieve those objectives and the goals for the company. And one other thing to touch on with the internal controls. So again, I came from auditing, always enjoyed the internal control analysis, evaluation, assessment part of it, but it really just kind of grazed the surface. But on the client advisory services side, what we're able to do is really get a deeper dive into it. We could provide a comprehensive analysis of the company's control environment when it pertains to accounting, financial reporting, and then operations. And we can advise on the action items that sometimes need to get put into place immediately by management and the company. And a lot of times it's to improve the effectiveness of those controls. And then optimally, once we have the effectiveness figured out, we can make things more efficient and really streamline those internal processes and procedures. We'll get in there anytime we come in. It's about, again, learning the business, having conversations with personnel within the accounting, finance departments, and then making sure that you have, again, that infrastructure that's adequate for carrying out those key functions. And then we're going to look at the information technology piece of it too. are the applications, the software systems in place, are they adequate and sufficient for capturing all the data and from the operations and from the accounting and reporting process that's needed to make those key decisions for your business going forward. And so again, it's comprehensive, it's deep, and then a lot of times we'll end up even supplementing certain roles, whether it's a CFO type of role, or we can staff, basically a whole accounting firm ourselves. And we normally find that it's beneficial for a company, especially cost beneficial in the short term. And then our goal is always to replace kind of our firm and any staffing we may provide with an internal structure and infrastructure that the company can use to grow and continue to succeed going forward. Last but not least, I have some examples of just some case studies of businesses that we've been involved with. With one, a struggling company from a cash flow and a profitability standpoint. And the current team that was in there was just poorly managing the whole manufacturing and accounting system integration. So we came in, we assumed a CFO role, we supplemented the accounting function, we staffed it with accounts payable, accounts receivable, personnel that can process those transactions and provide, again, that operational accounting piece that is so important to, the higher level, the managers, the controllers, the CFOs, and management. Just getting that data into the system, we're able to step in, streamline those processes, make sure that operationally the accounting was still working. And then from there, we were able to redesign the procedures centered around those vital functions and implement a standardized monthly close process, reporting process. This company then was allowed to operate for years beyond its life when we first came in. And eventually they were able to sell to Fortune 500 customer in a vertical acquisition. So a good success story there. With another one, again, and there's a common theme here. It's a lot of times a struggling company. Obviously, when things are going well, people tend to maybe underestimate or ignore some of the accounting piece of it. But when things are going bad, it's one of the first places to look at potentially improving and increasing, because it's all about, again, getting that information and that financial data that you need to continue to make decisions. But for another client, it was in the automotive industry, a manufacturer for large GM customers. We did a comprehensive study and focusing on factory capacity, the utilization of that capacity on the production floor, and then rebuilding standard costs that were just outdated and leading really to poor business contracts and poor decisions. So what we did was we helped right the ship, and they were able to renegotiate their pricing with those large auto retailers, Ford, GM, and able to continue on from there. So again, there's things that operationally a company may be working just fine, but when you look at the financials, the pricing may be wrong, the cost structure may be wrong, and we're able to get in there, identify it, and help improve that, for any manufacturer. So a couple of success stories for you, but there's a lot more out there. I just thought I'd share a few of those. So thank you, everyone.